Greetings, friends, subscribers, all those who in time will tune to this channel and will see Algo and I at work. Welcome. This is the before market open high time frame analysis, maybe a review. You'll see as we progress with this video. Welcome. I am the consistent, profitable, independent thinking trader, actually informed also thinking trader, and I am in the process of programming an algorithm with backtesting, journaling, and tape reading experiences so that I can use it to deploy it in the future to execute trades from me. I am greeting you all from Suriname, South America, and I hope that this high time frame will be a educational, informative study and video for you. But I am also underlining the disclaimer that is now before you, that any trade that you will take based on this video, the author accept no liability for any indirect, incidental, consequential explanation damage that arises. We recommend that you go for advice to your financial advisor so that you can know the risk you are about to take and engage the market. I always said, if you do not know how to trade, how to hurt yourself, how the market can hurt you, how you can hurt yourself in the market, it is absolutely necessary to pay attention to this disclaimer and do not engage the market based on any information that you will gather from this video. It's just for educational, and for those that know how to trade, it will be a great video, great advantage for them. That's why I'm doing this. Want to go to the chart. This is the 1 minute chart. Since I think since Friday I have not opened the chart. I took a day off yesterday, and we are on the 1 minute chart of the Nasdaq future 100 future trade June contract 2024. What I normally do, and that is what I will do now on the 1 minute chart, I'm marking, I think we will use this, maybe we can use this purple color for the Friday closing price. Friday closing price was on, and I don't have to pick the closing price, and it will be the new week opening gap. And because we don't know where the week will open yet, we mark it with settlement. And then when we know, I think it is a Friday of the 7th of June, 7th of the 6th month, that is crucial. And then when we know, then we go to mark the high or the low depending on where the market opened. This is probably one of the things that we need to get accustomed to. It is one of the uncertainty that we have been taught, and we know that we cannot know ahead of the market. We may have some guesses, we may have some guesses, yes, but it is better for you to accept that the opening price on Sunday around 6 o'clock is something that we do not know, and it is an uncertainty that we have accept as trader. And when you accept that uncertainty, it is better for you, and you go, and when it open, you mark either high or low, premium or a discount, and then project the week based on what they give, what the market makers give as opening price. The same reasoning, the same logic for new day opening price. Let us go. It is the 1 minute chart. I want to clear everything and then go right to the weekly chart. You can take this one also off. I'll leave that. Let's go the weekly chart. I'm doing this of 1 week. Doing this, and I think it is better for us to do the annotation as we go. This is where we close this past week with an up close. That is a bullish candle. My chart, I use annotation on the weekly chart. I use the color green, and the color green, if you see every candle that is green or up close candles, every candle that are black or down close candle. This is something you can customize. This is all that you can customize. You can have blue, orange, depending on your own taste. I'm using this color. I have used black and blue in the past, but I have settled with this color. And for annotations on the weekly chart, I use the color green, and that is this green. And now I've just marked out a busy. A busy is a gap that we find between 3 candle 1, 2, 3. Candle 1 high does not reach the low of candle 3, forming this gap, and this gap on the up close candle, we call it a buy side imbalance. Only on the buy side have the market offer price, as the market offer prices from this time frame, seeing it, looking at it from the weekly time frame, and sell side must be made efficient, and that's why we say it is a buy side imbalance and sell side inefficiency. If we see a gap on a black candle or 3 candle, but it is on a black candle, we call that one a SIBI. It's the opposite of the buy side. I still mark my chart with green, this green on the weekly, and this is 1 candle, candle 1, candle 2, candle 3. The low of candle 1 have not candle 3 have not traded to that low. Therefore we have a gap on a black candle. That candle we mark it with the annotation. That gap is actually a fair value gap, but its specific name is a SIBI, sell side imbalance, buy side inefficiency. The reason why I have drawn that over is to show something that a SIBI or a BISI can be used by the market as an inversion fair value gap. In this case, normal is it that we create this gap, and price can trade to and then continue to drop lower, bearish. But it trade past it and use this not only as a to enter and drop and do this, but use this to trade higher to the upside, use it as an inversion fair value gap. And we trade past it, come here, this now being a support. Actually, this is where the theory of real support came into place. We are doing our annotation, very quick annotation. Normal what we ask ourselves on the weekly chart is, where is price most likely to draw to? Either price is going to go for a stop run above or below marketplace, or price will reprice to a inefficiency to make efficient that inefficiency. And an inefficiency like this, inefficiency is a gap, and either price reprice to it to make it efficient, or price trade to a buy a liquidity pool above or below marketplace. What we have also said, and we are, as we are using the language that we have been taught by Mr. Hudson himself, ICT, we say that whenever we see a long tail or a long, in this case I don't really see, a long wick, that tail or long must be considered as a gap, and from high time frame it is good to grade those levels so that you have them on your chart as we build on what is termed in algorithmic theory price delivery continuum. This is equilibrium, consequential encouragement of this. How many months ago? This is 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6 months. 6 months ago, 6 weeks then ago tail. We marked them, we graded them in upper quarter, in lower quarter, upper quarter being 75% and lower quarter being 25%. Let me finish doing that right now. Just the 25%. And that is 75%. So with all long wick or tail, we will grade them, we will look for any inefficiency, and we will use those inefficiencies. We will mark those inefficiency. We are here seeing another inefficiency, that is this, from here, taking also with it from here to that. This is on candle 1, 2, 3. We are looking at the top of this candle 1 does not match, have not reached the low of this candle 3. So between candle 1 and 3 we have an approach candle that have a gap. We call that gap a busy. To put that in the shadow, it has been used already. Actually, I will take this SEBI out. I marked it to illustrate inversion fair value gap and a SEBI, but for now, to clear the chart and have some more clarity, I will take this shadowed SEBI inversion fair value gap off the chart. And I think we have also a long tail on this candle. This is a down close candle on 28. It is marked 28 of May. Let us grade this level also. You go and pick up your Fibonacci tool. we'll actually copy. And the consequential encouragement of this tail, it is 1. When we start trading later, it will be 1 2 week ago minus 2 week ago tail. Bring it here, this one, the 25%, that is the beginning with the lower quarter of the tail. We are finding it being here. And then the 75%. Yes, it is not 57, it's 75%. So I need to correct it right away. And also correct it here. 5%. We are now marking. Actually, the marking of this time frame does not take that long. This is only because I'm using every time frame to make some remark, give some note that will and can be helpful for those that are attuned. I think for now we have all the levels that are salient, that are true. I'm looking at a swing high, which is very important. Why? Because above every swing high there is a there are liquidities, and it is best interest to mark the swing high, and above that swing high you have buy side liquidity into form, as we normally says it is in buy stop order. Those who are trading in buy stop, and protector stop for those that probably take a short on this candle, have trimmed their stop loss to this high. What we have seen from this chart, from this weekly chart, and that is all we do on the weekly chart. The weekly chart is the time frame that gives us our strongest directional bias. It gives us an idea where the market most likely will go, and whenever we see a weekly chart, we can formulate a weekly chart directional bias. That is going to be the directional we will hold. We will filter our trade through the whole week. For one candle is the one candle on the weekly time frame is a whole week trading range. So for now we have seen the normal question that we asking ourselves is where were we, where are we now, and where have we come from. I'm marking this because this has become now an order block, a bullish order block. And then we are here. We have just trade and close above the swing low and create a high. On our close we open. We trade to, if we're almost to the consequential encouragement of 2 weeks ago tail, a rally up, take the swing high, the buy side on this side has been engaged, and close above it. So we think we don't try to pick top and bottom of move. We think price may from this point continue to rally and to go higher. The narrative may be that price drop to this bullish order block, candle, this bullish order block, and most where we will have a less stand for bullishness. Well, if we close, that's why I will mark it, if on the weekly basis we close on the mean threshold, we close below the mean threshold of that order block, then that will be for us a less time for bearishness, and we will be considering either to sit still and see what the market do, but we will considering lower prices. We can in a way beginning to think that price, because of the function of this order block, may open, drop to this bullish order block, and rally right away to the bearish side, or price open, drop further to the main threshold, and we will see how it close on this how it closed with in relationship to the mean threshold. At all we will try to find out. For now we know if we open, see the range of expansion. If we open right here, somewhere here, we open, and it will be to reach this order block, it will be 168 handle. That is enough for us to plan trade and to trade. And even if it will open and rally first to the buy side, which is not what we support, that is not a few, it is already 124, you call it 142 handles above. So on either side, which I don't support this narrative. I support the first narrative for it to open, drop first to the bullish order block, and then rally. If it will rally, drop if it continue to drop and close below the main threshold, I will be trusting that price will continue to drop toward the sell side of the market. But if it open and stay above the main threshold of this candle, of this order block, I will be trusting for further rally toward the buy side. So what is our conclusion from this time frame? We have marked all the salient points, or the inefficiency, or the lows. That is also a swing low, 1, 2, 3 candle, and the low below this low, we have a swing low. Below us, every swing low, there is sell side liquidity in two form, and it is sell side liquidity for in sell stop orders, and protective stop loss for long holder, long position. Those that are long here have trimmed their stop loss to here, and price does go up or down for this purpose. This is what we have from the weekly chart. I think we are done. So there's somewhere here order block that we could mark and leave on the chart just for completeness sake. It's also a bullish order block. An old bullish order block, you can call it. I can put it in the shadow, but still it's good to mark an old order block. We drop from the, I will take a, we will drop from this this time frame. We will go to the daily time frame. and then we will try to find out if the idea that we have been thinking about from the higher time frame, a frame chart weekly, if it is being supported, and if not, if it is negated, what does the daily chart give us? The daily chart is one of the one of the important time frame, so we also stay and spend some time analyzing and checking the daily chart. I first put all these weekly annotations in shadow, so that the daily chart can jump and have a much more prominent display. So I'm putting them in shadow. This is the work. Normally you will be writing, and not only writing, but do some positive self-talk, priming yourself, working with your mind, telling your mind that you are glad that you are able to see that the market have traded just as you would like to see it, and then you build experience. Do that all right. I think I will do that still later in the evening, but for now I'm just doing this audio to be prepared before the market. Or for now the market is close market, so I'm do the annotation. Okay, let me take this one out. Okay, from the daily chart perspective, we can see that we already have here 1, 2, 3 candles, and there is between candle 1 and 3 and gap. This gap we marked it as a busy, a buy side imbalance, sell side inefficiency. On this candle, they have only provide to the market, they have provide for us what you call it, they call it the buy side, buy prices to buy. Buy side have been offered from this. We expect to make this efficient. This buy side imbalance is now imbalanced. To make it efficient, we expect the market to provide sell side inefficiency. That is the name. It is a fair value gap, but its technical name is buy side imbalance, sell side inefficiency, busy. We see the market as indeed trade to and through this swing high, this monthly swing high. It has engaged the liquidity that is above. The market have dropped on Thursday and Friday into the busy, but it have not yet reached the consequential encouragement. It can be that the market will use trade further, and that is what we want to see. We want to see price trade down and actually to this consequential encouragement, maybe further. That is what we will do when we will start analyzing further. But let us continue and do the annotation. If we see that there is a, like we have two down close candle, 1 and 2, and between them there are no body but only tail and wick overlapping each other. That is what we call a volume imbalance, and it is also good that we mark those volume imbalance for on lower time frame, or on the time, even on the time frame you are working. This is they have influence on price delivery. This is the price delivery continuum. It is from high time frame, monthly, weekly, 4 hour daily and 4 hour to the lowest time frame, sometime also sub 1 minute, sub 1 minute volume imbalance, sub 1 minute. Even to that, we are looking to the price levels and the things that can have influence on price delivery. I mark this volume imbalance. The reason why I do that, on a daily chart, a volume imbalance is a strong pull of price. It can pull price strongly towards it. What normally we can do is that we also grade it. We grade this volume imbalance level. That is 25%. This one 50%. Let me do it. You have noticed that I use the color blue, to make annotation on my daily chart. So every annotations that you see on my chart and you see the color blue, you know it is from the daily time frame, and then you can see. I think it was last week I was talking about annotation and why you have annotation on some charts and why not. We all, and that is actually my goal, my desire, I would like to in time trade naked. Naked is being trading without any annotations. Trade naked the chart. For now, I am also learning how to program and give my subconscious mind reason how to read empty charts. So for now, I'm making annotations and have them on my chart. I'm doing them with color code so that I can see. For the green is from the weekly chart, the blue now is from the daily chart, and so that I can clearly see. Here you have another volume imbalance. I will not grade it like that. I will just put this and make it a darker and write volume imbalance. I write volume imbalance. It is there. I can center it like this. I think it is already becoming boring to some of us because we are keep on doing the same thing. For the algorithm is not going to be changed overnight. It is what price have been doing all these years behind us. We will pay attention to this tail and this one. The reason is because the reason why we will do that, we have said and we are growing accustomed to the fact that whenever we see a long tail that is in relation to the body of this candle, this tail is a long tail. This one is a long tail. What we do, we grade these tails. We grade them, and actually when we look at this tail, the graded level of this tail is almost to the weekly graded tail of 2 weeks ago. So this tail on the daily chart now is almost the same as the weekly. And then I make this. Let me make this remark. The graded level of the Friday 31 5 tail is same as the graded 2 week ago tail. So we have this annotation, meaning we will not again grade this level, but we will have in mind as we go that this long tail is one, some people call it indecisive. It doesn't have a body, but there have been some trade here. We will see that on lower time frame, that this time frame, this tail, its graded level is the same as the consequential encouragement, the 25% of 2 week ago tail. So we have this annotation right on our chart. We will be paying attention to these levels. If price drop and decide to use this volume imbalance and trade lower, I have a comment to make, and I think this is why I will take this volume imbalance out of the chart. If it decide to trade lower further than this, continue to rebalance or complete this busy and then trade lower, we will be looking at these tails, for they are also long tails, and we are respecting it. I just saw that an information that is good to share is that whenever the market create an volume imbalance and it is traded below this volume and place a body over it, that volume imbalance in algorithmic chart delivery is not to be actually counted as a significant volume imbalance anymore. When it was here and the market was in display, it was a strong draw to it. So I will not consider it to be a valid volume imbalance, because already we have a body placed over this volume imbalance. So what we can see from the daily chart is that indeed we have traded past this weekly swing high. We traded to engage the liquidity that is above marketplace. We don't try to pick top and bottom, so automatically we are expecting that we will continue to go higher. But how? We are expecting price to open and trade somehow lower to this order block. Remember the weekly order block, and it matched almost with the busy, the consequential encouragement of this busy is the middle line of the busy. If we trade to this busy and then price return to the buy side, it will be what we are expecting to have a up close week. If not, if price decide to continue to trade lower, we will be looking at how price will manage, how price will trade center, yes, how price will trade to this volume imbalance, what role will it play, and how we will close on this weekly mean threshold, the order block, and the weekly mean threshold. That is what we have. It's left for me to do some annotation. Monday, this is Friday. I do this. Monday till Friday. Monday is Friday. Whenever we look at the daily, the weekly, the high time frame charts, it is good for us to think about the EPTA daily range, the look back period, and also the seasonal influence to understand that the market is trading according to the algorithm. That is what we know and come to expect, to come to believe. That is why we are doing this. It's what we have understand from the teacher himself. These markets are algorithmic delivered, driven also. They are controlled, 100% controlled. If we look at the 3 week ago, we see that we had a strong bullish week last week. And there is a principle that a strong week, a strong bull candle are prone to create a small candle. So we may go this week and don't see too much trading or too much range, all because we already have a strong week. We are now in relation to the seasonal tendency. We are in the period of time, actually mid-April to mid-June. This week we will have mid-June. The market normally give us the decline toward the summer month. So toward the summer month. For now, we think we reason that because of the election, the U.S. say in a presidential election, these markets are being pushed high, driven, manipulated high. So having those information at our background, we are thinking that the market may continue to rally because of what Fed is doing, or because of the seasonal influence. We may be trading in a range and then drop to the fall low, as we are now going from the spring high toward the summertime, where we may have some quiet market. If it is a normal trading year, in this case, it's not really a normal trading year. There are a lot of geopolitics and mainland USA issues that will influence and that will be used to usher the manipulation. It is the daily chart. Last week we have 2 weeks ago we have a drop to the a decline day, a bear day, and now we just finished a bull day. Let me do some daily annotation. I see here a swing high that has been engaged. From the daily chart, we already are beginning to looking at the narrative, the why price will go to certain level, and from where does price come from, and what price is prone to do. We're trying to get a feeling of where price is going. Above any swing high, we have buy side liquidity that has been engaged. Even this week, buy side liquidity has been engaged here, creating this run, significant clearing of buy side liquidity, giving us again the impression that as we have cleared this high, creating a new high for the year, we might see first a drop down, and this drop, as we close this mean threshold, how we trade will tell us if we will be range bound and rally again, or will continue to drop to the summertime, have a little bit consolidation seasonally, go to the fall low, and then start rallying to the buy side. For now, we are looking at the chart and try to swing high. It's been also engaged. Actually, not just swing high, it is a relative equal high. For now, we are just going to be looking at price and trading what the market gave us to trade. There is a swing high here. Already there is an annotation. These are lows that can be considered for day trading. The engagement of first buy side is significant. This is outside day, so they have already engaged buy side and sell side. We want to see how they will open, how the market will open, to see how this practically indecisive candle, the wick is almost the same as the tail, indecisive candle, what the market will do in relationship to the information that we will see. This is where the importance, it is where we will see the importance of the calendar, what news do we expect, and what they may do with that news to manipulate the chart. For now, I think we have covered almost everything. The conclusion of this daily review and analysis is that we don't want to choose top and bottom. The price rally engaged a significant pool of liquidity. It dropped and closed as down close, but it have giving an impression we may go. It may be an institutional order flow entry deal. It have traded to this, what you can mark as this, and if traded to this order block, it may be rallying from there further. We'll take this from the chart, and we expect price that even if we will trade higher toward a buy side objective, we are looking to see an opening that will be a premium opening, so open above the settlement price. So I want to see a premium opening and then drop to at least the consequential encouragement of this busy, or maybe to close it completely, trade toward this, and then rally, or price will be drawn to this volume imbalance, and I want to see how they will close either up, below or before this main threshold before I make a decision if we will continue going down. At the seasonal time, the time of the year is telling us that we might be seeing a range bound. They will be engineering buy side and take it, engineering sell side and take it, but in a large range bound. I will have that, make some notation. I think I already have. Okay, twice is not that bad. This one can be deleted. Okay, I will do some back testing later. It's my personal study, and for now I'm going from the daily to the 4-hour chart to get some more detail. And what I do is that I will put in the background the annotation of the 1/8, the daily chart, and the background, having them all in the background. The color blue is going to the background as well as green. I can see the chart clearly. the 4-hour clearly. I see what price have done clearly from the 4-hour perspective, from the weekly perspective where it has traded to what it has used, and then I will come with the annotation of the how you call it, the 4-hour annotation. You see that here we have a 4H, which we use the color purple, a 4H busy. It is candle 1, candle 1, candle 2, candle 3. There is a gap, a fair value gap. That fair value gap have no how you call it, there is a gap between candle 1 and 3, and it is a green candle, an up close candle, and that candle we are using it because of that candle we call it a buy side imbalance, sell side inefficiency. Looking down further, we see a small fair value gap there. We need to pick all of them. For price does reprice up or down for only two things. It go up to engage liquidity above market price, or it trade to reprice to some inefficiency above marketplace. Marketplace in this case a SIBI. It trade down to liquidity below marketplace, or it reprice to an inefficiency below marketplace, in this case a busy. So prominent we have this has no favor. There is a small right here we have a gap. Annotate all of them. When price will be painting out, you will know and see how these levels are very important in price delivery. We've seen at the 4H it is clear to us that the market have rallied and taken actually a pool of liquidity right here. The market with purple, you see it is a swing high. You can call them relative equal highs, swing high, but also other high, relative equal highs above which we have buy side liquidity that has been engaged. In my eye, not strong enough because just the wick have engaged them. So I can be looking for price to extend further to take this, to engage this liquidity. This all depends on how we will trade these coming day. We are looking for we have seen a swing low taken after the rally to engage price. With displacement, they have taken a swing low, which is a sign and a signature telling us we have market structure shift down. The market open once more in this 4-hour time frame and trade bullishly. Again, once more have take a higher high, a high previous 4H candle, and now we see a sharp drop toward the sell side, indicating that this close, if we look at this balance price, we have seen this up and it is balanced. We are looking at a bearish order block because it already violates that candle. I have a familiar pattern that I like to see. If it had violated that bearish candle and it had 1 minute, and it had closed below this candle, I would be very sure that we would that we would be going down to the sell side. From the 4H perspective, what I can see and predict, because we are now already in territory of we call it the intraday trading, day traders territory. We can take our Fibonacci and check. This price has been made balanced as price rally up and rally down, equal balance. We can for now expect this. It's the equilibrium of that balanced price range, equilibrium of that balanced price range. I want to have that on my chart also, like the 25% and the 75%. I want to see price may open as premium and rally toward this equilibrium of this balanced price range, respecting this balanced price range, and then start dropping toward the sell side, engaging. This one would be a suit objective. First of all, it's a swing low, and this swing low, normally what we say, it's what we will be doing. It's a swing low, sell side liquidity is below it, and we pick our Fibonacci tool. We go, and because it is a long tail, we graded these levels, the 50% of this 4H tail. We graded them. Grade this one. We have the 25% of this. Yes, and we have this. As price paints these level on lower time frame on intraday section will be very salient. We see that price first open, trade high, drop aggressively toward the sell side, take this 4H low, but did not reach a consequential encouragement. We expect price to open, trade toward this equilibrium somewhere here to maybe, but on closing basis we want it to stay below the equilibrium and drop using this graded level and trade lower. We are looking for price to reach this one daily consequential encouragement, this weekly order block, and then on closing basis, if it trade past this main threshold on the weekly, we know how we will, and close below it, we know how we will engage, and we'll look at the market then. This 2 is a significant low that I want to have on my chart because it is 1, 2, 3. The middle candle low is higher than the low from the candles on both sides. Bottom left. This must be placed also bottom left. This is how we analyze the chart. It's how we go to predict price delivery. We looking at the price delivery continuum, and we try to find out where will price most likely trade to. If it trade according to our analysis we are in, we will be using our model to just take advantage of or capitalize on that. What we are looking here is a strong week. We had a strong week last week. Let me bring it to Friday. Friday is here, the 6 o'clock. Yes, Friday. We have a strong week. This one is Friday, 6 o'clock too. Here. We have a strong week bullishly, and we expect that either we see a nice trading week, engineering buy side, or a nice trading week, trading toward the sell side. For now, I am looking for price to open, trade, maybe with a small Judah swing toward the buy side, toward the equilibrium, drop from this perspective toward the busy of the daily and the weekly chart, or order block. When it reaches this order block, I will be expecting price to either rally to engage this engineered buy side again, which has not been traded to or trade to with great satisfaction, or to continue trade lower. And how we close this main threshold will tell me how what the intention is of the market maker. Here we see swing low on this side. We can add, copy and add these. This swing low, below it there is another swing low right here, and here you have a swing low which already we have marked from the weekly. So these are the targets that we will be looking, objectives, the graded levels 2 weeks ago. With this review and this analysis, I don't put how you call it, I don't put annotations, but normally I do that, priming my mind, encouraging myself for my own journaling. I'm doing it from the 4H. This is maybe a useful remark. I don't usually come to the 4H, but for record and educational purpose, I'm now doing it. I don't usually come to the 4H if the daily chart is clear. I have a clear direction where it wants to go. Then I jump from the daily time frame to the 60-minute time frame. I think we've covered well. Or this is a swing high. We might have us for the chart to be some cleaner. We won't make note of it. Let me. It's a swing high. It's a high that has been created. So top swing high, and above it we now have buy side liquidity. So it is the chart. We now, from the 4-hour perspective, I want to drop with this annotation to the I have them here. I think it is clear for us what we are expecting. I take a picture. This is for my logbook. Logbook 7 is in play. And take a picture and have the 4 hours. I'm more prone to, I like the ES better. It is a gentleman market, but I like and it is for a mini contract. You have one ES contract is equal to one ES contract is equal to $50. One mini Nasdaq is, one handle is 20 US. So the exposure, if your how you call it, if your equity balance is not that much, you can trade the mini contract, or you drop to the micro, which is you trade the micro contract, which is much more smaller. For ES is $5, and for Nasdaq you have $2 per point per handle. I'm putting them on the background. I will be paying attention to these levels that I have marked and to these order block that I have marked. But now I'm on the 60-minute chart, and let me put them on the background enough that I can highlight. I use the color orange to highlight significant level inefficiency and level on the 60-minute time frame. So whenever I'm on watching the chart and I see green, I know this coming from the weekly time frame. I see in this purple highlighted, I know this coming from the here you have this is the 4H, and it is like in the background of the chart. We have seen here some smooth high, very smooth, has been traded to, and the first thing that our eye jumped to is we are looking at a 60-minute orange 60-minute SIBI, which actually looks like what we may call begin to frame the narrative, the framework, and the framework what we may call model 22. But let us see how price will open and how they will deliver price. The SIBI sell side has been delivered, sell side imbalance, buy side inefficiency. How do we come? We have candle 1, candle 2, candle 3. The low of candle 1 does not match and have not traded to the low of candle 3. There is this gap, which is actually a fair value gap, but its technical name, algorithmic name, is sell side imbalance, buy side inefficiency. There is a strong, what we call the strongest PD array that I have been taught is the imbalance, that if we had traded to the low and have made balance this, the bias is in place, we might be seeing immediate rebalance. The best is to looking at it from the how you call it, from tape reading perspective. When you're busy tape reading, it is best to see price straight to that low, make it balance maybe with a small covering spread, and then start dropping very aggressively. The policy is that when we see immediate rebalance, we don't take partial to target, but when we see imbalance, we take partial to a certain level. What we are looking at the daily the 1H is we are looking to obvious high and obvious low, and these obvious low and high these are actually relative equal lows. I will do it with orange, and I do it with bottom of relative equal low, and then we give me a sell side liquidity. We have them here. We change this to orange, or we are on the, and there is a strong an inefficiency above price, market price. Remember that this is the 4H balance price range, so there is also below this relative equal low, we have also I change that swing low from the 1H perspective. I have also behind it a 4H graded tail that we are seeing behind the sea, and a busy 4H and a daily 4H, a green, a weekly order block. I want them to be closer. This gives us great insight into where price may trade to. This is the obvious draw on liquidity. Price may, and we are expecting price to rally toward this consequential encouragement of this SEBI sell side imbalance, and then reprice aggressively toward these sell side objective. There is a tail that we are looking at right here from the daily of the 60-minute perspective. I like to grade this tail for it is approximate, and price may use it to do the turn before the 4H equilibrium, or price may trade through it and then use this SEBI. But I want to grade this level. Every tail and every width are being considered by the algorithm as a gap, so we graded them and we keep them on our chart, having our eye on them. If you watch correctly, we see that price have traded this strong tail have caused price to rally toward this 4H swing, relative equal high, engage the market and return. When price return, we see price drop aggressively past this first 25% of this tail, respecting open trade toward it, create this busy, and is respecting the lower quarter, the 75% of the tail, and have left us equilibrium. We might see, and it is where we frame the narrative, the frame where price rallying, open in premium, continue rallying all the way to this SEBI, and then drop to engage these buy sell side objective toward the weekly order block, and then we will reason and continue further, if it will continue further. The analysis gives us a approach to the market that framed our idea of how we will approach the market, which level we will be looking at certain and specific times we call kill zone, and I will mark some on the 50 minute and show you on the 50 and the 1 minute what we will do, and on the 5 minute my hunting and execution time frame, and then close the record. We can actually go to and check what we'll have on the news side of the trading week, coming trading week. Looking at Monday, Tuesday, Wednesday, Thursday, Friday, we are looking at no news. We have filtered only US news, and it is clear that we will have no news on the Monday. The Tuesday we have on 1400, that is on 2 o'clock p.m. a medium high impact news, followed by Wednesday a strong day. We have CPI number and FOMC data also being released, to be followed by another strong Thursday. PPI number will come also, and then Friday also another week. What this calendar is telling us is that this week is loaded with news, there is room to see, let me copy and save the calendar for this. There is room to see strong move in the market. There is room to see the market using the news manually to trade either up and down. We'll be trading and checking intraday volatility, and actually we'll wait after the opening to see how the market will trade to make prediction. What the market can do also is that because of the expectation of the news, the PPI, the CPI, and FOMC, big money can pull their money out of the market, giving us a small range week and also a week that may see indecisive but also clearing both sides of the market. Let me annotate some inefficiencies right here. Has been made but not fully covered. Actually, there is left that part to be made efficient, but I'm leaving it there. Want to see a body set over it. We see a bigger inefficiency here. That can be draw of price draw to this inefficiency. This is not a long way, but it is a swing low. We pick this one and from here, so we annotate the chart. This is also a swing low. This is an order block. This order block has been used to trade higher. It's been used to trade higher. We annotate the chart and try to read the order flow, try to read the what the market have done last week, and what it is prone to do is also an order block right here below with an imbalance here and there. This is a 2-hour imbalance. We are on 4H, but we have here a 2H imbalance. We leave it like that. There's also room to draw price with this order block, and practically we have annotated the important. We will be doing daily review and analysis. We will be looking at how the market used these levels on daily basis, and based on what the market give us, we will be understanding how they are either priming the market to trade to, or what they are doing to trade, to allow the smart money to engage and take profit. Smart money do the trapping, they do the unseating, and the IPTA is providing the data. Excuse me. Since Tuesday, I think this is Tuesday, Friday 96, 1600. We can looking at it daily basis and stay. Normally for my own study, I will be looking at the ranges of the day, a small range to follow a large range, and trying to reason what was the catalyst for that large day. What was the catalyst for that large day? This is Yes, actually the market open at 6 o'clock at small range. Give me this one, high and low. This is high and low. This is left. So on the buy side, relative equal high on daily low. They drop to both actually are 1/3 of this high, have taken and engaged a do a stop run into an order block with a tail that is significant. It could have traded to this busy 4H consequential encouragement. It could have reached this the 60-minute consequential encouragement, but it chose an rally toward the buy side. Have actually consolidate way trade, engage trade, and we are expecting this week to see a beautiful trading week. For my own record, I like to take a screenshot and have him on the 50-minute. When I have on the 50-minute the obvious high and low, I'm looking at what is the draw. The draw here, we have the draw. This SEBI is the draw, and this relative is now the draw. What we are going to do is on the 50-minute try to find out which side will be first engaged. This is a wick, a long wick. We are doing this constantly on a chart, trying to find. It is now on the upper, up close on the upper. This 25, it may trade like come to this consequential and open and come to this consequential encouragement, trade towards the busy, engage it, snap below and go to the sell side. Either way, we will be here trading and experience the beauty of trading smart. Yes, this is the 50. We go to the 15-minute. If we had annotated that tail, we would have seen how and where price have traded to. We see now price close above. There is no inefficiency here. There is a swing high here, a swing high here. This can go in the background. We do that with every. Put them in the background. Go in the background. We know what they are. We just don't want them to be too prominent in another time frame, and so we put them in the background. Price is closer to this liquidity, and the market most likely will open and drop and engage this liquidity first. There is also a long tail right here that can be annotated on the 50-minute chart and rally first toward this 60-minute to then further trade. How it will project depend all from the opening of the market, and for now the market is closed. We want to look at the opening and from the opening we will be looking at how the market will trade further down, further in the week. Our protocol is clear. On the Monday, if it is a normal trading week, on the Monday we are trading only after 12 o'clock. We engage the market after 12 o'clock. We allow the market to manipulate and set the course on from the opening Sunday. I like to record the opening price, have my new week opening kept defined, and then I leave the chart until Monday. I can do some tape reading. Most of the time I sit with some of the other sit at some other live traders. I like doing Tanya. I like to trade by Met. I like listen to some other traders, trying to find reasoning and see how the market maker play with the sentiment, and then I drop to after lunch. I come to the chart and do trading. If the market maker give us a true manipulation according to our analysis, then we engage, and we engage the market from the 5-minute perspective. For now, most of the time I do the annotation of 1 week on one chart, the one I'm intended to trade that week. In this case, I want to trade the Nasdaq this week, but it's all depend on the relative strength analysis, strength analysis that I will do on pre-market before the market open on Monday, before I go to watch other. It all depends on that. It depends also on my equity, which one I want to expose to more and or less risk. Yes, I'm hunting and actually executing more on the 5-minute chart. On the 1-minute chart, one can execute. It's on the 1-minute chart. One can execute to make the risk smaller, and there you can see some more inefficiency here. See where market can drop and turn. See more volume imbalance and see how the market trade and engage volume imbalance. I'm approaching the market with my model 13 or 22 model, and also I'm watching and the sell side delivery of a market maker sell model, or buy side delivery of a market maker buy model, meaning I'm waiting for the smart money reversal, the low risk buy, or smart money reversal, low risk sell, and then I engage that leg. That is my models that I am deploying, and within the market maker sell model I can see also the optimal trade entry, breaker pattern, as I read and continue reading order flow. I am going to the 15-minute chart, and I'll go to ESM, the spools, this chart. They are sisters, and this one have already traded to this 15-minute SEBI. There is still another SEBI here. This is strong displacement that have create shift in market structure, a rally into this big 50-minute SEBI, and we think price will continue to go to the sell side. Depending on who will go there first, I will be hunting on that and execute from that time frame. I do the YM M24. This is the YM, have already trade like the ES, trade into the big SEBI. This one drop, create two SEBI in the drop, use already trade to this one, left it one. So we are expecting sell side objective to be traded to after it either rebalance to this or further trade to this SEBI. If it left it, we're seeing it as a breakaway gap and actually look to sell side objective. What I do too is I check the I'm looking at the future contract of the dollar index, in most time 60 minutes. You're seeing that it's already traded to the upside. It is moving to the upside, and dollar risk off is when dollar go up. The fiber and the cable Euro USD are being used as going down, and also the GBP US dollar, which is the pound, British dollar pound. The cable will trade, they are trade mark to market, but the other asset classes are being used to then trade, will be allowed to trade lower. They are not marked to market. The currency are marked to market with the dollar index. I'm looking also at crude oil future, crude oil future. We saw the big market. Gold future, gold USD. This is some, and as I'm looking at it, the US dollar and the gold future have a inverted relationship. Actually, this is what determines what the US dollar will do. We are looking at price now dropping, and one day daily chart, there is room for the gold to further drop to the swing low. We don't see any reason why it should not trade to this imbalance. So if gold will continue to drop, the dollar index will going up, fiber and cable mark to market will go down, and then the other market, ES, Nasdaq, NYM, will be allowed to trade. Risk off scenario go down. So that is what we have. Also considering, we have now gold. Yes, these are the market that we are looking, and actually on purpose to trade this Nasdaq. That's why I have annotated. Well, I will go to the 15-minute, and I have market well, and I'm going to hunt my set of parameter from the 5-minute chart, and relationship with time first, and then these levels. I will be hunting at certain and specific kill zones. London session, AM session, and PM session, final trading hour. There is where I be hunting my set of rally toward this, can take this and turn with a market maker sell model, or it go there, engage this, and then trade lower with what we call model 22 to reach these relative equal lows. That is how I will be engaging. Most important of all trade, and that is, I want to conclude with that, is that it is good for you to calculate your risk, because that is what taking your trade from gambling to scientific to science. You calculate the trade, calculate the risk per trade, you calculate what you are willing based on your equity basis, what you're willing to take. It is also one of the things is that when you start trading, if you start trade, you have not mastered yet all the languages, all the things that are salient in price delivery. It is good that you trade micro contracts. Let me show you what a micro contract you have for one handle, one handle. You risk 2 2 US dollar. Same chart. It have some nuance, some characteristic that need to be known because it is some volatile market, but it is the same. The only risk 2 US dollar with the Nasdaq and with the micro ESM. You then risk, instead of $50, you risk instead of $50 you risk $5. So if your equity is if your equity is sound and it is good, the best thing is for you to use, if you start trading, use micro of these contracts. My mentor used to say, go slow. You can make a fortune with micro. You don't have to trade with mini. I have a money management that take me after 75%, 35%, 2 times, 25% 1 time. If I take losses in a row, I drop straight and trade micro contract and build and correct the drawdown until I be able to trade again with mini contract, where the risk and my equity balance is not submit to greater risk. That is what I wanted to share with the community and those that will in time listen and hear this weekly analysis. I for myself will do some back testing later in the evening, put some annotation on the chart, and then add let's see, and then add some videos to the site. Those that have come to us to see some analysis, I will put some raw analysis later. That is when I'm done. Here I've conducted a mini study, and then those of my TikTok community, I'm welcoming them, and I like to see some grow on the channel for me to give some more nuggets, those things that I've learned extracting and 30 years experience from the mentor himself. I want to say for now goodbye, and ask you to stay well and trade well. Be responsible and trade well.